Professionalism, Ethical Codes and the Public Interest. Part A. Evaluate organisational decisions using the Tucker 5 question approach. In light of ethical issues, the Tucker 5 question approach is an important tool towards ethical decision making. 5 questions regarding the organisation proposed by Tucker in 1990 can be used to ensure the ethical considerations involved while making important and strategic decisions. They are as follows. Is it profitable? Does this decision make economic sense? Is it legal? Is this decision in accordance with all applicable laws? Is it fair? Is it fair and equitable for all the people involved? Is it right? Will this decision bring good to society? Is it sustainable or environmentally sound? Will this decision have any negative impact on surroundings and on the environment? Part B. Describe and critically evaluate the social responsibility of accountants acting in the public interest. The public interest can be defined as the collective well-being of the community of people and institutions the accountant serves. Accountants hold a huge influence on businesses and society. They perform many critical responsibilities which are essential for businesses, such as financial accounting, auditing, management accounting, consulting, and taxation work. They have the power of stopping wrong things from happening, such as fraud, bribery and corruption, which increases the public's confidence and trust in organisations. Part C. Assess management behaviour against the codes of ethics relevant to accounting professionals, including the IESBA, IFAC, or professional body codes. IESBA stands for International Ethics Standards Board for Accountants. It follows a principle-based approach. The code clarifies up front the acceptance by the accountancy profession of its responsibility to act in the public interest. Detailed guidance is led by the fundamental underlying principles of ethics. The Ethics Guide supplies a conceptual framework that requires accountants to identify, evaluate and address threats to compliance and apply safeguards to eliminate or reduce the threats to an acceptable level. The ACCA also publishes the Code of Ethics and Conduct for members, which is broadly in line with the IESBA Code. Principles of the ACCA Code can be remembered as PIPCO, which is as follows. Professional competence and due care, emphasising on maintaining professional knowledge and skill sets that are required to ensure that a client or employer receives competent professional service based on current technical and professional standards, legislation and techniques. Integrity, being straightforward and honest in all professional and business relationships. Professional behaviour, to comply with relevant laws and regulations and avoid any conduct that might discredit the profession. Confidentiality, should respect the confidentiality of information acquired as a result of professional and business relationships. Objectivity, should not compromise professional or business judgments due to bias, conflicts of interest, or undue influence of others. Part D. Analyse the reasons for and resolve conflicts of interest and ethical conflicts in organisation. A conflict of interest can happen due to many reasons. For example, one party is in a position of extracting some benefits from his decisions or actions while on official duty, or when objectives are not compatible with objectives of the other side. Disagreement between stakeholders due to a varied range of interests is also a core to conflict of interests. Conflict of interests also gives rise to ethical conflicts, where it may put any person into an ethical dilemma of what should be the correct course of action. For resolving ethical conflicts, there is no universal solution which fits in every scenario, since every scenario is different. Tucker's 5-question model is one of the frameworks for resolving the ethical conflicts when they arise. Each situation needs to be analysed carefully, and the final approach to resolve the conflict will be persuaded by many factors, such as the attitude of leaders towards ethical matters, the management and leadership style, the culture of the organisation and presence of an organisational code of conduct, the presence of any laws and regulations supervising conduct in certain matters, the existence of guidelines governing the work performed by a particular profession, the extent of power and interest of stakeholder groups in conflict, and the extent to which these can be viewed as legitimate. Part E. Assess the nature and impacts of different ethical threats and recommend appropriate safeguards to prevent or mitigate such threats. Threats to independence of action and conflict of interest, which can be remembered as ifs, are as follows. Advocacy, representing a client in two different capacities. For example, when an audit firm assumes the client part in a dispute or acts as their advocate. Safeguards are using different departments available in the firm, making full disclosures to the audit committee of clients, and if risk to independence is too high, they will just withdraw from engagement. Self-interest. Actions that benefit you and not the clients. Safeguards from this threat could be discussing the issue with the audit committee of the client, taking steps to reduce the dependency on the client, consulting independent third parties such as the ACCA, maintaining records of the entanglement information, compliance with all applicable audit standards, and guidelines and quality control procedures. Intimidation. Being forced into a course of action against your will, threat of dismissal, threat of litigation, and pressure to reduce charges can be the intimidation threats created by the situations. Safeguards will include disclosures of such threats to the audit committee, review of the work for any evidence of bias, and even the possibility of removing affected individuals from the threat. Familiarity. Having a personal connection with a client may lead to the audit firm and its staff becoming too familiar with the client and its staff, which may impact your independence. Safeguards could be rotation of affected persons away from the position which is under threat, and having a quality control review of any persons where the familiarity threat is present. Self-review. Reviewing your own work, or in other words, a failure to be sufficiently sceptical, such as an audit firm providing services other than audit services to an audit client. Safeguards could be based on the guidance from the ACCA and the IESBA, depending on the situation. Part F. Recommend best practice for reducing and combating fraud, bribery and corruption to create greater public confidence and trust in organisations. Fraud, bribery and corruption present many difficulties to organisations since it impacts the reputation of the organisation, increases economic issues, creates an atmosphere of dishonesty, distrust, and may also lead to conflict of interests between duties to principals and own self-interests. Though legislative laws are being introduced in different parts of the world for organisations to have sufficient controls in place, such as the UK Bribery Act passed in 2010. Many processes are recommended and can be introduced in the organisations to reduce and combat fraud, bribery and corruption, such as establishing the culture which shows the commitment of the board to fight corruption, and it should be reinforced by the involvement of senior management in development and implementation of bribery prevention procedures, and having a clear communication of organisations, procedures and policies. The Code of Conduct is perhaps the most important element, which should be communicated to each employee and to clients in order to reassure them. Risk assessment exercises for identification of circumstances where bribery may be an issue built into business risk assessments. Reporting and whistleblowing should be encouraged by the board to know any threats to compliance. Monitoring of risk management. The board should receive regular reports on compliance with internal procedures such as due diligence on agents and details about questionable behaviour that has been discovered.